Now, Pakistan has finally decided to bite the IMF bullet. Battered by a huge financial crunch, the country will give in to all demands laid down by the International Monetary Fund to move forward on the release of desperately needed funds. Conveying its willingness to accept all four major IMF conditions, the Pak government has requested the lender to send its mission to the country at the earliest. Reports say that Pakistan prefers the visit to take place next week to conclude a long-awaited agreement to revive the loan program. Pakistan now says it will implement all decisions taken during talks with the proposed IMF mission. The IMF had four major demands: the market-based exchange rate, increase in electricity and gas prices, and additional taxes to make up for the revenue slippages, while containing the fiscal deficit to original program targets with certain adjustments for flood expenditure. But that's not all. Pakistan is doing much more to ease the IMF pressure. Reports say the Pakistani government is all set to promulgate a presidential ordinance to impose taxes to the tune of some 200 billion Pakistani rupees. The hike in taxes is one of the demands of the IMF mission. Reports say the government has also decided to slap a 1 to 3% flood levy. By promulgating a presidential ordinance, the mini budget will come into effect from the 1st of February. Officials say that Pakistan had been holding back to agree to the IMF's conditions because all decisions involved significant challenges. They said that counterbalancing measures were needed to prevent the situation in an already bruised economy being aggravated further. And for more on this, our Pakistan Bureau Chief Anas Malik sends us the latest. Take a look.
Following the depreciation of the Pakistani rupee and worry of funds, the Pakistani government has finally decided to give in on the demands of the IMF and agree and rather adhere to the four demands that have been put forward in order to go ahead and have the ninth tranche of the IMF available to them. Now, the Pakistani Secretary of Finance has also written to the IMF mission chief inviting them to visit Pakistan. What we're expecting is that a rise in gas prices, electricity prices, further cut down in subsidies that are given any on flour or any other items precise to that of agriculture in nature, and also a free-flowing market currency rate. That's what we understand that are those demands that were put forward by the IMF in Geneva as well, and now the Pakistani government has decided to give in. The Prime Minister has himself also headed at least two meetings with regards to the economic condition, and after the nod, as per Daily Dawn, after the nod by the Prime Minister himself, only then the Secretary of Finance has written, showing Pakistan's willingness to adhere by the IMF conditions in order to go ahead with the IMF program. Anas Malik in Islamabad, Pakistan for WION World is One.
WION World is One is now available in your country. Download the app now and get all the news updates on the move.